You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskens, your host as always. This week, for the first time ever, we are venturing into the industrial property market. It's been a long time coming. I've had to wait a long time to identify the person I thought was able to speak most eloquently about this topic, and there's no one I've seen who could speak with such rigour, such information and such passion as Wayne Chorley, Director at Realmark, specialising in the industrial space. Wayne, thanks so much for coming in, mate.
My pleasure, Trent.
Wayne, as I said, it's been a long time coming. We've spoken about commercial property with Luke Rendazzo. We've spoken about childcare with Anthony Morabito. We've spoken about residential property across a couple of hundred episodes now. We're in our 5th season. It's taken a while for us to get here, but the industrial space is one that really has had a story over the last, I'd say, 3 years. That is at least of note, because it seemed like it was in slumberland for many years before that. And I think it's poignant going into 2023 to have a conversation with someone who knows it so intrinsically to discuss where's it been, let's tell the story, and it feels like a new chapter is going to start next year. What do you think the word on those pages will look like? Can we start off firstly with the real 101 about industrial property for those people who've just never thought about the space before, your mum and dads? Explain to us an example of industrial property.
A typical industrial property would consist of an office warehouse or office workshop. The difference between a warehouse and a workshop is that the workshop has gantry cranes and some hard stand that goes with it. That's a typical industrial development. Size-wise, I guess about 1,000 to 2,000 square metres is a fairly typical sized industrial warehouse or workshop in Perth.
So that's the building itself?
Building itself, yeah.
What sort of land portion might it sit on?
You work on a 2-to-1 ratio, so for 1,000 square metres, you'd need 2,000 square metres of land.
Just for parking?
Landscaping,
Yep.
yeah. Curtilage around the building to get trucks in and out.
Geez, if I can quickly digress, when I look at industrial property in Perth, most of those 1 to 2,000 square metre buildings are sitting on 1 to 2 hectares. Is there an opportunity there we can talk about later in the episode?
There are some, but they'd be fairly specialised, those operators, who would need a very large component of hard stand for whatever reason.
So we're talking big sheds, essentially.
Yep.
Where would we find these sheds in Western Australia?
Welshpool, Canning Vale, Bibra Lake, Balcatta, Osborne Park, Wangara, Malaga, Tanirabup. Kewdale Welshpool are almost merged into one now.
Yep.
Hazelmere is an emerging area with a lot of activity out there at the moment. Land is transacting and there's been a lot of development out in Hazelmere of late.
Henderson?
Henderson, of course, yeah. Henderson is a predominantly shipbuilding or marine related, but very popular area.
How do we rank those in terms of values, or are they all really just the same, quite homogenous, and they simply just geographically based on the needs of the operator?
Land values, Welshpool Kewdale has always been the most expensive.
Because of its proximity to the airport?
Its proximity to the airport is the main attraction to both occupiers and investors. Osborne Park. Look, at Osborne Park, land values are probably $900 to $1,000 a square metre. So it's really no longer an industrial precinct.
Is that just because it's too expensive to
too
operate
expensive.
profitably?
It's just too expensive.
So is that just going to keep, I guess, blending into commercial
It's going to become
retail?
more large format.
Yeah.
A lot of the bigger industrial users have moved out of Osborne Park.
So it's like showrooms.
It's bulky goods. It's large format, as they call it now.
Okay.
So it's got a higher and better use than industrial.
What can we expect to pay as a tenant for a warehouse that we're leasing out?
There's a distinct hierarchy in values in the industrial space, but the renting market, the rents have basically blended out into one rate per square metre. So typically it's $90 to $100 per square metre. For something that's a bit older, new is at $125 to $135 per square metre, and that blending out has been caused by the lack of supply in the market. We've seen very strong demand for leasehold space in Perth, and the vacancy rate's hovering around about 0.5%.
So it's very similar to the residential market.
Very similar, yep. So it's basically a full house.
So a lot of that C grade, D grade stuff, simply by virtue of the fact there's nothing around, is being taken up and compressing the prices up closer to a lot of the A grade stuff.
Yeah. And that's right. Where's the demand coming from, you might ask? Since the pandemic, a lot of companies, organisations have realised that they have to have a warehouse in Perth.
So less centralised, less Sydney-centric.
Correct. We've all experienced the supply chain problems, and companies have realised they must have something, they must have a presence in Perth, and this has created the demand. Unfortunately, the supply side of it has been limited by the fact of the construction costs. A lot of developers have put their development plans on hold pending some relief in terms of
steel costs.
Price rises.
Yeah. Is it mainly steel cost?
Steel,
I guess concrete as well.
Steel, concrete, all the materials have been increasing. I'm told that the materials cost they've stopped increasing, but labour is still a problem. Getting labour, it's very expensive and very limited.
You noted there that existing older stock might go for $90 to $100 a square metre. Is that square metre of the land or of the building?
No, that's over the building.
Okay, the building. And that newer stock's more like $130.
Correct.
Is it simply because the developers of the newer product need higher prices? Is it because there's any more utility on a warehouse that's 1 year old versus 50 years old?
Yeah, it's just meeting the market. It's where the existing market sits, and the newer market is basically on their land component, your construction cost and your developer's margin. But typically, for a new development, you'd be looking at about $130 per square metre for your warehouse. If you had a canopy, which was fully sprinkled, ESFR, which is early suppression fast release sprinkler system, that'd be probably $45 to $50 per square metre under the canopy. And then your hard stand rate is about $25 to $30 per square metre if you had some sort of yard where you could store materials that don't need to be stored in undercover. They can be stored outside.
Bulky goods, ISO bags, those
pipes,
sort of things.
Yeah, that sort of stuff, yeah.
You talk about how quickly that market's been soaked up in the last couple of years. Is it because there's been a huge influx of demand, or simply because the pool of supply was so small in the first place? Or a bit of both?
If we go back pre-pandemic, the vacancy rate was about 20%.
We thought residential was big at 7.5.
Yeah. Industrial real estate, the leasing side of things, we had an almighty boom in 2006 and 2007, and then it fell off a cliff. Since that time, there's really been no rental growth and high vacancy in industrial ever since 2006, 2007.
It's been a dead market.
Correct, yeah. Flatlining.
Was that pretty tough for you to operate in personally?
Well, no. A good agent can make transactions in any market, whether the market's going up, whether the market is going down, or whether the market is flat.
I assume a lot of people would have lost a bit of money in that time, maybe selling out, or are they mainly long-term holds?
People who bought in the boom and for whatever reason had to sell in the intervening period, they would have probably lost money, yeah.
Based on reduction in rent.
Break even, yeah. Yep.
Well, let's segue into values then. Now, when we think about, again, mum and dads, they're used to a house being worth what the market will pay for it, really. There's a little bit of a connection with replacement cost and land value, but really it's just based on demand and supply. Now, the industrial market, in the sense that it is a commercial asset, my understanding of the value is that it sits as a reflection of a yield, a cap rate against the rent. As you just mentioned there, if the rent drops significantly or drops in any way, well, the value of that property will drop consummately. Can you talk to how long normally leases are, how the story has been over the last 15 years with regards to rents, and how the story has been for yields?
Well, in terms of lease terms, if a developer's building something that's fairly specialised, like with some very heavy-duty overhead cranes or cold storage or chiller rooms, you'd be looking at a minimum of 15 years to get the payback. But more typically, it's probably 5 to 10 years. Some companies are loath to go out to 5 years because they prefer a 3-year horizon for their leases, just because they see some growth, so they don't want to overcommit themselves to a particular size property for any longer than 3 years. But in terms of obsolescence of buildings, because the market in Perth is so tight at the moment, there's probably some big sheds out there that are probably past their use-by date and have been well and truly depreciated, but are still returning $90, $95 per square metre to the owner. So there's no drive from their point to demolish it and rebuild or upgrade it. Whilst there continues to be a market, those older style sheds will be quite viable.
So in the downtime before the pandemic, were those sheds probably renting out at $50, $60 a square metre?
Yeah. Like they'll probably, what was $60 a square metre pre-pandemic is now $90.
And was it 90 in the boom before, in 2006, 2007?
Yes, it did, yeah. We've basically got back in terms of rental rates to where we were in 2006, 2007.
So it sort of reflects the residential market in that vein. Cap rates, though. They're obviously a bit different based on the relationship with the cash rate.
Cap rates have compressed remarkably in industrial. Going back in time, it was probably 9 or 10% return for anything industrial.
Would you say that's a normal? You didn't think that was overpriced or underpriced? It just was what it was?
That was just the market. It was probably undervalued, I thought, but that was the market.
People were still making money in that space. You could build and still make $1 at 9 or 10% cap rate.
Yep, absolutely. Yep. What we've seen, though, since the pandemic, the industrial markets, not just in Perth, industrial markets worldwide have just been booming. Cap rates got down to probably mid-5s, even lower on the East Coast, down to mid-4s, and some of them even broke 4% return. It was seen as a safe asset class. A lot of people, a lot of big funds and institutions were underweight in their portfolios, so they bought into industrial at the same time. And look, and cap rates have come out, probably moved a little bit with we've had 8 interest rate rises in as many months.
Well, we've seen 3% increase in the cash rate.
Yep.
How has that relationship on the cap rate been connected to the cash rate change? It's obviously not been one for one.
No, cap rates in industrial have probably moved, I would say, probably only 0.5%. So what was 5.5 is now 6. What was 6.5 is now 7. And the reason where we haven't seen the same sort of reaction, I think, as we've seen over on the East Coast, is there is more headroom here in WA, both in residential mortgages, and the same applies to industrial.
So just the affordability the value that comes out of that cap rate.
They can withstand the increased loan repayments. Also bearing in mind that the rentals have increased across the board over the past 2 years by 30%. So that little uplift in your cap rate has been more than compensated for by your uplift in rent. So whilst your cap rate has moved out slightly, the value of your asset has actually increased.
If you had 10 properties in Welshpool, how many of those would be leased out to an operator and how many of those would be owner-occupied?
Welshpool is probably more leasehold. I think the occupiers, the type of user in Welshpool, the big logistics companies, they prefer to lease. It'll probably be 60-40, 60% leased, 40% owner-occupied.
Is that standard across Perth, or are there other areas that are way more owner-occupied?
That's fairly standard, across the board.
It's interesting to note that there's not a one-for-one relationship. It's the same as the commercial spaces, of course. And to be frank, if there was a one-to-one relationship, I'd say the whole industry the arse would fall out of them because no one would be able to provide more supply because nothing would stack up.
Yep.
So of course that's a positive. Do you see this as lagging the market a little bit, or do you think, well, no, look, Trent, it's probably going to stay in the next year or so? I really do expect it to probably stagnate now at 6 or 6.5%.
I think the cap rates will stay pretty much where they are for the moment, certainly for the next 12 months, 18 months. We're seeing a lot more supply come to the market. There's a lot of speculative development happening, and that's a developer builds on spec.
Just hoping someone leases it at some point in
without
the time
any,
of the
without
build.
any without any pre-commitment. And there's about 60,000 square metres of space coming onto the market on a spec basis. So that will alleviate some of the supply issues. But I think rents will continue to hold where they are, probably even some further increases there.
Just with inflation?
Just with inflation, yep. Yeah. And I see cap rates staying pretty much where they are.
Essentially because people can afford to pay that amount for that product. Rents aren't going to drop. And as long as there's a buck in it for an owner or a developer, it's not really that related to the cost of capital for the buyer. Is that why?
Correct, yeah. And the demand as well, the demand side of it. There's a lot of demand for industrial real estate in Perth from the East Coast because they see value over here. They see a market which in their eyes is undervalued.
Well, I put it this way. I think they see a warehouse that is being leased out by a distribution centre or something like that for $7 million in Sydney that over here costs $4 million. And it's the same thing with the same operator. Why is that? It's simply that difference in land value.
But land values are much cheaper here. We've seen some of the major developers from the East Coast buy large tracts of land for future industrial estates. And again, because they see a long-term future in Perth. But the main attraction at the moment is the value. They see value here. Compared to the East Coast, $130 a square metre, $140 per square metre in rent for industrial space. Here in Perth, we see that as being high. They see that as being, wow, that's a bargain, that's cheap.
There's a lot of space for growth.
Yeah, yep.
Let's talk about the buyers then. Who are buying your industrial properties at the moment? Is it local owner-occupiers? Is it local mum and dad investors? Is it local fund managers? Or is it actually, given the population we've got, we're 1/10 of the population, is it a whole bunch of East Coast people as well?
It's all of those, Trent. It's all of those. Years ago, if you had an asset in Perth where you're having trouble selling it, in desperation almost, you'd get on the phone and ring your contacts on the East Coast and try to sell it into the East Coast markets.
As a last resort.
That's all changed. You get a listing to sell something here in Perth Industrial, and it's one of the first calls you make.
Because they've got more hunger, more money.
There's more demand,
There's more of them.
more money, more of them, and that perception of value they see here. They're getting an extra percentage point at least on their cap rate here as opposed to buying something on the East Coast.
So the industrial investors, regardless of where they're investing in, the world has now got so much smaller because of the advances in technology, so they don't have to come over here, or they can, it'll be quick. They can see it with videos, they can see it with your virtual tours. All the data's there. It's not some foreign land anymore, Perth, to them. There's 10 times more of them, and they've all just like in the residential space, because it's the same story as residential investment and commercial investment. There's a huge push from the East Coast of people that go, well, I could buy here, but everyone's talking about how the market's dropping here and I'm not getting any value. Or I could go to Perth, which is absolutely on the up. The cost of everything's half. Why wouldn't I go there?
Yeah.
And there isn't that. It doesn't seem to be that barrier that there was 15 years ago.
Yeah, correct. I think that demand has been fed. I think in the past, Perth's probably been viewed as a boom and bust sort of economy. I think that perception has changed over on the East Coast in particular, and they really see opportunities over here.
Even if it hasn't changed, I think the perception is it's boom.
Yes.
So get on.
Yep.
I think a lot of people see Perth as Sydney 10 to 15 years ago and go, well, we've got the experience, we've seen Sydney,
Exactly
and
right.
We're just going to apply the same theory to Perth now, going to jump on there, and everyone from Western Australia's got the last 10 years of being burnt in their mind, going, oh, I just don't know yet. Bang, that time in that same minute that they've had that trepidation, the Sydney person's gone, I'll take 3 of these, thanks.
Yep.
And
Now,
it's probably pushing us out of the market a little bit, isn't it?
I don't think so, no. We've got buyers agents ringing us, asking us what we've got to sell.
From the East Coast?
From the East Coast, yes.
You don't have those from the West Coast, though, do you?
No. But I think I think the market will continue to be strong on the sales side of it. The only issue with it is the market is so tight that like stock levels are very, very, very low. So it's hard to get the listings. But once you've got it, it's a pretty I wouldn't say easy, but it's a good sale.
Let's say I've got a certain amount of money in my pocket today, and I decide that I'm going to spend it on buying a piece of industrial land and developing it without an operator at the moment. I'm going to get on with it right now, get my approvals and do it. Would you call me crazy, or would you say,
no,
you're all good?
No. Look,
I've got an operator for you, and this is where you should put it.
Yeah. If you're building on spec and you can get your hands on, say, 4,000 square metres of land, you could put a 2,000 square metre workshop there with a 10-tonne crane, and I can almost guarantee you it would hardly ever be vacant. That's the sweet spot. That engineering company, that size, it'd be readily lettable.
I can see you've got a pep in your voice, the way you speak about it. It comes from a guy who's clearly had a hard run for a few years before COVID and is now enjoying the fruits of, I guess, a change of guard in property, a change of guard in the way that distribution centres, that global companies, that mining businesses, services businesses view Perth and how they need to have a presence here to succeed. And against a backdrop of massive undersupply, because if you've got 10, 15 years of this industry getting kicked in the nuts, it's not going to have that much supply coming on. So what you're probably talking to is an industry that's playing catch up.
Correct. Yep. And it stands to reason. If rents and values go up by 30%, then it's effectively a 30% pay rise for the agent.
What sort of tenant personifies an asset that provides the best cap rate for a developer or owner versus a weaker one? Can you give us a broad example of these companies?
It's a good question. And again, this gets back to COVID. Pre-COVID, tenants who had a specialised facility, like anything to do with food preparation, food storage, chiller rooms, cool rooms, those properties were viewed as being too specialised, And they were actually caned a bit by the investment market because the thinking was, well, if they vacate, what do I do with the building? It's highly specialised. It's built to their specification.
There's only so many steggles in Perth.
What do I do with it?
Yeah.
Since COVID and with the supply chain problems, these same properties now command a premium rent and a premium cap rate because there seem to be sticky tenants. There's a limited supply of these sort of properties, and once they get in there...
Ain't going anywhere.
They won't go anywhere, yeah. So that's been a big change in the market. But more typically, your logistics, your Linfoxes and your toll transports, anything to do with logistics are probably your key premium tenants in Perth.
Who would be your weaker tenant that you think these are going to be the ones that will fall out first when the market eventually turns at some point? Young fella starting up his own mechanic warehouse or something like that.
Whatever, something like that. Yeah.
Well, and I think that probably reflects very similarly in the commercial space as well. National brands, strong footprint, obviously going to be there for a long time. I assume you would spec it to suit as well if you could reverse engineer it and get the operator first versus the speculative food and beverage cafe that is having a crack for the first time.
Yes.
So it'd be very similar as well in the industrial space.
Yep.
So you're obviously pretty positive about it. Do you see a chance that we are oversupplied in 2-3 years in any market, or do you think we just need more and more? We need more land. There's not enough land right now in the first place. There's so many people knocking on my door for space that I don't imagine a segment of this market that is supply. Which way is it going in 2 or 3 years, Wayne?
It all stems from the land supply, and over here in Perth or WA, we've got Development WA who are a major player in the land development.
They turn the tap on and off.
Yes, yeah, and they've got a lot of estates at the moment on the market, but they're all filling up. Sales are very strong for industrial land. Realmark were appointed by Development WA to sell land at Rockingham, and we sold out the estate. So there's a very strong demand for land, and it's a limited sector. There's not too many other land developers who come out and subdivide land for industrial, unlike residential, because I think we have the strength of Development WA. They
do the job.
Yeah, yep. They meet that demand. So we got a restricted supply of land, which means a restricted supply of industrial sheds being built on that land. I can see the situation of probably a shortage of space continuing for the next couple of years. In terms of an outlook for Perth industrial, I think rents will continue to increase. I think cap rates will probably stay where they are. We'll see a changing of the guard almost in terms of the ownership profile.
Okay, let's talk to that.
Traditionally, the ownership profile for industrial in Perth at the big end of the market has been dominated by high net worth developers, investors, local high net worth developers and investors. What we've seen over the past 3 years, and more particularly after the pandemic, is the entry into the market by big institutional buyers coming into Perth. We had Dexus, who bought the Jandakot Airport for $1.1 billion.
I've never seen someone make so much money in one transaction before, those guys at Ascot.
Good luck to them. Probably one of the best industrial plays in Perth's history.
Yep.
The Jandakot Airport. We had Centuria take out Prime West for $614 million, and then there was Five Capital bought all of the BGC property assets for $208 million. So we've seen a very high concentration of transactions at the big end of the market by East Coast institutions. That will continue, and there'll be a change in the balance of power where the institutions become the major player in the market. And they behave completely differently to the local high net worth developer. The local high net worth developer will not give incentives for any of his developments because it's his money that he's playing with.
Cash is king.
They would rather see their property sit vacant than allow a tenant to go in there and pay no rent.
It's a lot of old money, isn't it?
Correct. The East Coast institution, they're more than willing to give incentives, rent-free periods, capital contribution towards the lessee's fit-out, because they're transaction-based. They're all about driving the growth of the fund that the asset sits in. The high net worth local never sells. They're long-term holders, whereas the East Coast investor or East Coast institutional investor, they're traders in real estate. They deal in real estate. They trade in and out all the time. So as a consequence, we'll see a very different market in Perth industrial.
Well, the dynamic's going to change, isn't it? Be far less stagnant and far more, I guess, dynamic, possibly volatile.
Maybe not. I wouldn't say volatile, but we'll certainly see a lot more transactions.
More data as well.
More transactions at the big end of the market.
Do you think this is simply because the world has woken up to Perth? Is it, again, a factor of that globalisation, that more information, people taking our market seriously? Or is it that the buyers are becoming more sophisticated, more mature, they understand, more people understand this asset rather than going for the F&B or the commercial space or staying in the resi space? Why are there more buyers, fundamentally, Wayne, in industrial in Perth?
Well, I think Perth is seen as a safe haven. I think we handled the COVID situation very, very well. They see it as a safe asset class, secure. They see it undervalued in terms of rental growth and capital values. And they see value here. They see value in the Perth industrial market. Perth was probably a forgotten market for many years. But as you mentioned before, Trent, the advent of technology, they can view a property online, they can do their due diligence remotely, and it's opened up the market in Perth to all these eastern seaboard buyers.
Do you think sales agents as well are more connected these days? Do you think they work together? You've got larger national brands that are providing each other with more opportunities to present to their clients too?
Well, the larger national brands usually have a national contract with a larger real estate firm, but I think that there's more interaction between buyers agents and the selling agent than there ever was before. I think we're seeing the emergence of the buyers agent, particularly East Coast buyers agents, getting very active in the market, acting for buyers.
There certainly seems to be a strong focus for the first time ever in what is a very large and hungry industry, being the buyer's agent industry in the East Coast, that have all decided that Perth is the flavour of the month.
Yep.
At the expense of every other market, really, other than possibly a bit of Queensland. Yep. And it's the same it's the same in the finance market as well, now that I think about it, Wayne. For so long, financiers from the East Coast had zero interest in Perth. Not particularly because Perth was a risky market, but because there was a view that the Sydney, Melbourne, Brisbane market was so much low-hanging fruit there. There was so little risk that why would they venture out? Now I think in the absence of opportunity in the East Coast, there is a desperation to find opportunity in investment, in work for these buyers agents as well, that they're looking around, their clients are going, find us opportunities, and the buyers are going, well, it's Perth. Everyone look at Perth. Perth.
Yes.
And therefore you put 10 times the population all under a microscope looking at Perth for the first time in years on such a small undersupplied market. That's where I think we're noticing it.
Yep, it's a good observation. I think the East Coast markets have been so well picked over by buyers, and it's so competitive at all ends of the market, from the top down to the smaller assets, so competitive to acquire industrial property that they've turned to other markets such as Perth.
And look, all it can do is help us, right? If we have a bigger market of buyers, especially in these commercial and industrial assets where you don't have to live in the property to enjoy the benefits financially of it, then why wouldn't you, right? Yep. Wayne Chorley, Director of Industrial at Realmark, thank you so much for your time. It's been very insightful, but also informative for those people wanting to learn more about industrial property investment and development in this space. Thank you so much.
Thanks, Trent. My pleasure.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!